was a year of many notable achievements. If we take a look at a snapshot of the year, we see economic growth rebounding to about 7.2%. Level of investment has been maintained at over 30% of GDP. Headline inflation has declined to 4.7% and 59 months in single digits. Core inflation at its lowest levels ever. Unemployment has remained low, and the economy is no longer the $59 billion economy that we were talking about. It is a $67 billion economy that we will be talking about from today. The budget deficit has declined to 5.8%, numbers that we haven't been familiar with ever in the past. The debt to GDP ratio has also come down to 78%. And the last few months we have seen exports rebounding, and all 3 months we have had exports exceeding $1 billion for the first time in the history of our country. The trade deficit is estimated to contract to about 8.7%. Tourist arrivals have been strong. Remittances are expected to reach about $6.7 billion. FDI has surpassed $1 billion comfortably for the last 3 years. BOP has recorded a surplus of nearly $1 billion, say $700 million here, but I think once final figures are out, we'll probably see a BOP surplus close to $1 billion. Foreign reserves are at healthy levels, exceeding $7 billion, numbers that we haven't been used to once again. The rupee has remained stable, and foreign reserves have been sufficient to be equivalent to about 4.5 months in. We have taken many policy decisions during the year. Some have been essential for our country, and I believe those decisions have helped us to take the country to where it is today. And we are satisfied that the turnaround will be sufficient to create the growth and not too much in order to bring up inflationary pressure. Managing the economy is something like what Goldilocks story is. It shouldn't be too hot, shouldn't be too cold, it should be just right. It shouldn't be too hard, it shouldn't be too soft, it should be just right. So, striking that balance is important, and I think the way we are moving, that balance is being struck, and we will be keeping a close watch to see that it will be continuing in that fashion. The reasons for low credit growth are here: stickiness of the market lending rates, sharp reduction of owning activity, increased borrowing from funds abroad, which meant that there were companies that could access funds from outside and that they did not need to access funds from the bank, the high base effect, the sluggish global growth, and convenient access to the debt markets, all of which contributed to the low private sector credit, but nevertheless there were sufficient funds in the market in order to ensure that credit was sufficient to take the country forward. Meanwhile, something very interesting and something that we have been waiting for a long time also happened. The public corporations started paying back to the banks. We have been used to public corporations borrowing only and not paying back as much as they should have, but we saw a shift in that situation, and several key SOEs, particularly the CEB and CTC, the Electricity Board and the Petroleum Corporation, began to pay back some of the funds that they had borrowed from the banking sector back to those banks. It will also help to ensure that those institutions, CEB as well as CTC, will become a lot more viable in the future. The CEB's low reliance on petroleum and CTC's own price division helped to contain the losses of the CTC. If you look at the magnitude of that change, the CTC had a loss of 87 billion rupees in the year 2012. That has changed to a loss of only 6.8 billion rupees in 2013. That is also because the price revisions were brought in later during the year, but you'll probably see 2014 being a year in which CTC can break even or even have a small profit, which will ensure that these are viable institutions. No institution can be viable. And what is interesting, once again, my dear friends, is that these revisions were structured in such a way at the time that inflation was at its lowest, so that there was no inflationary pressure. Also, that got created into the economy. When the inflation was low, the adjustment was done in the fuel prices so that we still managed inflationary pressures as well as inflation in the single-digit numbers and in a moderation stage, and that was kind of having the cake and eating it as well. So it's an important adjustment, an adjustment that was vital for the country, but carried out in a political sentiment, and we believe that that change also would have an enormous impact on the well-being of our economy. In the meantime, net credit to the government was higher than anticipated, although the central bank net credit to government declined. But here is another area that we have to watch carefully to ensure that it is within manageable numbers and within manageable parameters, so that that would not be an issue for the future. With these developments, overall monetary expansion was somewhat higher than projected, but reserve money was only marginally above the projected level, and that is a manageable structure for us to go forward. We had some very active communication with the rest of the world, newspaper advertisements, press releases, media conferences. Many times that the government has been speaking too much, I think. I was told that I have been speaking on 252 occasions during the last year on official matters, in my mind far too many times, but nevertheless sometimes we have to do this because there are a lot of other stories that are also going about in various areas which we need to sometimes negate, and sometimes we also have to tell what's taking place so that there is that overall understanding of where the economy is moving in the future. During the year, Sri Lanka first Economic History Museum was opened by us. It is right across the road. It's called the Central Point Building, where it houses today the Economic History Museum. The location is very significant because that is the location from which all distances in the country are measured. So that's a central point in our country, and we aptly named the building Central Point Building. And on the other side of the Central Point Building is the Central Bank, so it's a kind of a central spot that you are in today. Let me now speak a little bit about the financial system stability effort of the Central Bank. During the year, we strengthened the supervisory and regulatory framework, focusing on risk-based supervision, calibrating the business models and the processes of all the banks, assisting and harmonizing with the emerging needs of the growing economy. And despite many challenges faced during 2013, the banking sector expanded in terms of both business as well as volumes and outreach. There's an interesting feature in this chart that you will see, that the banking density that is given by the provinces. You have the 2009 rank and the 2013 rank. What is interesting is that in 2009, the province that had the lowest banking density was another province. But by 2013, the same province had the highest banking density. Sometimes these matters are not highlighted. That's why I thought it may be useful for us to also reflect on these very interesting changes. And in a time that certain countries are talking about reconciliation as well as talking about Sri Lanka going forward with an inclusive manner, these are interesting and important factors to ponder upon as well. How did a province which is emerging out of a conflict move from having the lowest banking density to the highest banking density in a period of 4 years, unless there was a deep commitment on the part of people, on the part of authorities, on the part of everyone, all of you who are the ones who have been bringing banking to the doorstep of people, and that has been an important factor, and I want to especially take a little bit of time today to highlight that, because sometimes we do not ponder on matters of this nature. The funding structure of the Sri Lankan banking sector also underwent a positive change. The funding structures commenced a change process. Nobody can really use it, and we have made new coins so that those coins will once again go and get offered in Indian temples. So we are now making arrangements to bring back those coins. That's also not an easy job to do. 20 tons of coins takes a lot of effort. So we are doing that, and we are hopeful that the people will now, in future, when they worship, use the coins of that country and then make those offerings. That hopefully there's no confusion as far as the temples are also concerned. During the year, we also issued a third commemorative note, which was the note for Chogam, and that's the interesting features that we have. It's a limited edition, and about 5 million notes only, and that's an important facet of development in our country as far as the notes are concerned. We also commend the steps taken by the stock exchange and the SEC to improve the stock market activity. That's important for us as well, because it's part of the financial system, and the market capitalization increasing also is important. Another change that took place during the year was that the corporate debt market took off. For a long time we have been speaking about the corporate debt market, but it had not really come to the level which we wanted it to be. But now we see that also taking place. And during the year, about 68 billion rupees worth of debt was issued, up substantially from the $12 billion rupees of debt that was issued in the previous year. One of the most important agency functions of the central bank is the management of the Employees Provident Fund. The EPF is by far the single largest superannuation fund in Sri Lanka, and the size of the EPF increased by almost 300% from 2006 to 2013, reflecting an increased number of private sector employees in line with the steadily declining unemployment rate and the higher levels of income that the private sector employees have been able to enjoy during the last few years. Overall, the total value of the EPF grew by 12.4% during the first 9 months of 2013, mainly due to improved members' contributions and healthy investment income. The prudent management of the investment portfolio also contributed to swell the fund well above the 10% during each of the last few years. That growth helped to generate annual returns to its members that were well above inflation and the fixed deposit rates offered by most commercial banks. More particularly, the total income of the fund grew by nearly 12% during the same period. A comparison of the ETF performance with the other managed funds confirms that no other fund has been able to generate similar growth and rates of return as done by the ETF that is managed by the central bank. In fact, the rate of return to be credited to members for 2030 is also likely to be between 10.8% and 11.3%. In that background, the central bank is actually proud to state that it has generated high growth and also provided an ever-improving service to the members of the EPF. So let me also strike a little bit of a sad note here, that it is unfortunate that certain politicians continue in their efforts to make blatantly untrue allegations against the management of the fund. As has been pointed out in several occasions, in several research reports, it is likely that these allegations are being made with the ulterior motive of privatizing the fund management by making sweeping allegations of impropriety against officials. The EPF reiterates that as a long-term fund, its rates of return have been consistently higher than inflation as well as the rates of its competitors. So we can be judged by the returns that have been given as well as the way the fund has been managed, and I think these kinds of vituperative comments sometimes hurt officials, and it is my duty as the governor, who is overall in charge, to take responsibility for those matters, and we do want to say that it has been managed well, and we believe that these types of efforts should now stop, because these actually hurt the overall hard-working people who have been able to bring these results into this country with a lot of effort, as well as you can see in the slide there, from the year 1977 to 2005, over a period of 39 years, the central bank made profits of about 61 billion, and over the last 8 years, we have made more than double that amount, and that has been provided to the owner of the central bank, to the government, and that has helped to ensure that the fiscal deficit is also managed as a result of large sums of money being transferred to the government as profits as well. Let me now quickly touch upon the public debt. The public debt is a 6.8 trillion rupee debt that is under the central bank management, And here again, you could see that they are guided by ensuring that the debt is managed prudently. And if you look at the average term to maturity in 2010, it was only 2 years, 2.1 years. But it has now increased to 4.83 years, which shows that the average time to maturity is now improving, which shows that the debt is now on a sustainable track. And that's another important factor for us to understand. And debt servicing costs also have declined sharply. Interest cost has improved to 4.2%, down from 5.4% in the previous year as a percentage of GDP. And the net serving to the government as interest cost is now estimated to be around 80 billion rupees over the next 30 years as a result of the prudent management that has been done. 2-3 areas of that. Firstly, that the GDP has now reached $67 billion. Secondly, that SBI inflows from about $272 million in 2005 are now regularly far ahead of $1 billion each year. And also that the budget deficit is on track to be on a lower path, all of which augurs well for the future as we go into the next decade and the next few years to ensure that we make use of these benefits that we have already achieved. And our per capita income, which has been the area that we have been talking about for some time, is on the way up. And if you look at 2005 to 2013, we can see that it has been a steep rise, and now we reach an area of around $3,282, although the figures are not being yet confirmed. We believe that in the range of about $3,280 will be what we would strike by the end of the last month. Let me now focus on the future. As Dr. Veer Singh mentioned, we take the future very seriously. At the monetary board meeting, we only devote about 15% of the time of our meetings to the past. Next 85% of the time, we speak about the future. We look at the future. We debate as to how the future is going to be. So let me share a few thoughts on that as well. We have diligently planned. We have taken into consideration the stress that we have. The SWOT analysis that has been done by the central bank on the entirety of the economy has been a very vibrant one. We have subjected the economy to a highly technical as well as practical assessment, and what I am going to tell you today is based on all that research which you can also be privy to as well as you can also benefit by. For a long time, central banks were considered to be the repositories of all this wonderful information, but only to be kept to themselves. They never shared it with the others. But today, the world is shifting. The world is moving to a greater transparency, and there is a recognition that it is important for us to share information so that others also could benefit by that, so that others also could prepare their own plans based on the immense research done by immensely talented and technical people, so that all can benefit by those types of information. Firstly, we set out our goals. The conduct of monetary policy will be fashioned towards realizing a sound medium-term macro framework. The macro framework that we are looking at is looking at a growth which is moving up from 2014-2016 from 7.8% that we are targeting, and we believe we will be able to achieve in the year 2014, going up to 8.5% by 2016. We also believe that the total investment would rise from 32% in 2014, going up to 33% by 2016. The headline inflation, we believe, would be in the range of about 5% this year, and going down to 4.5% to 4% over the next. There were people who said that what number that we have given may not take place. So we published those numbers. This is a supplement which is towards the $4,000 per capita income. It was published in April 2013. In that we have given certain numbers, and those are the numbers that are there on the screen. In this, we gave all those numbers. And if you look at those numbers, you'll find that there is hardly a deviation from the reality that we are looking at today. So, that says that the professional job has been done by the central bank. So we used to see some nice, interesting articles also. There was a nice article of me with a nice picture with a lovely bodybuilded man. Says that, interesting point, it says optimistic expectations should not reach unrealistic proportions. The expectation of doubling per capita real income in 6 years is wholly unrealistic. So this is what people say. But I won't show that, only to make a point that these are not unrealistic assumptions. These are realistic assumptions which have been proved by the fact that those numbers, or very close to those numbers, can be achieved, and that's something that we need to take cognizance of in going forward. So going forward, the medium-term framework appears encouraging, and like what has happened in the past, we will work towards these numbers. It is one thing to passion, one thing to have a realistic number. There is another thing to move towards it, to make that happen. Take the necessary steps. Prepare the necessary framework in order to do that. So that's what we'll be talking to you today about. Over the past 7 years, we have been diligent in our preparation. And each year, we have formulated plans that are announced at the strategic plan retreat. And based on such plans, we have prepared and presented the roadmap to the economic stakeholders of our country. In 2007, we focused on growth and stability. In 2008, we crafted the way forward towards prosperity. In 2009, we challenged our own comfort zones. In 2010, we searched for a way in which prosperity could be fast-tracked. In 2011, we realized that we have to face a new era, and we prepared by repositioning ourselves to meet that challenge. In 2012, we wanted to raise the bar in our service to the nation. In 2013, we prepared for the transition to be a $4,000 per capita income country. This is the year which we believe is right for us to step up and to avoid the middle income trap. The roadmap that we have unfolded today is in keeping with the vision of His Excellency the President Mahinda Rajapaksa, and is one that will help us to step up progress and move the country towards prosperity. While doing so, the implementation of all these plans will also ensure that the dreaded middle income trap in which many countries have stagnated for years is avoided by Sri Lanka. My dear friends, we stand ready to implement our plans together with you, and we look forward to a bright and prosperous 2014. We wish you all a very happy day.